Hello and welcome back to the Handsome Trader channel. It's fantastic to have you here with us today.
It really is great to be here.
Now, before we even look at a single chart today or, talk about any specific ticker symbol, I want to ask you a question, and I want you to really think about this as you're listening. Do you think that trading is about finding a magic strategy? Do you think it is about finding that one perfect indicator, or is it actually about changing who you are entirely?
That is the million-dollar question right there.
It really is. And listen, if you are enjoying the content we are putting out, please take just a second to hit that like button, share this video, and subscribe to support the channel with your whole heart. We put absolutely everything into these deep dives, and your support means the world to us.
It really does help us keep doing what we love doing.
Exactly. But today we are going deep. We are not talking about support and resistance lines or moving averages. We are talking about the absolute hell a trader has to walk through to actually become profitable. And we are basing this entirely on the insights of a legend.
Yeah, the man himself, Jesse Livermore. He definitely knew a thing or two about heaven and hell in the financial markets.
To help us navigate this incredible story, I am joined today by Thomas. He is a veteran trader and an absolute specialist in trading psychology and market survival. It is an honor to have you on the show today.
Thank you so much. I'm really looking forward to getting into this with you. It's a topic that is very close to my heart.
So we are looking at the life and the very hard-learned lessons of Jesse Livermore today. And the premise we are starting with is, frankly, a little heavy. It basically establishes the core truth that, well, they lied to you.
Yeah, they really did.
Yeah.
And I know that sounds like a harsh truth, but it is the truth. If you walk into any bookstore today or, if you just browse around online, almost every guru and every resource is trying to sell you a strategy.
Right. It's always about the strategy.
Exactly. They sell you a pattern. They tell you that if you just master technical analysis, or if you just find the right combination of indicators, you're going to be rich.
Yeah.
But the reality of trading history makes a completely different point.
Which is?
That the difference between the winners and the corpses in the market is not the chart. It is internal survival. It is entirely about what happens inside your own head.
The corpses. That is a very vivid way to put it.
It is vivid, but I use that word because financial ruin is a very real kind of death for a trader. Jesse Livermore is the perfect example of this internal journey. Here is a man who literally turned $5 into $100 million.
Which, back in the early 20th century, is just an unfathomable amount of money.
Unfathomable. But he didn't just sail off into the sunset with it. He lost it all. Every penny.
Wow.
And then he made it all back again. And then he lost it again. He actually went bankrupt 4 separate times over his career. So when we are talking about these stages of survival today, we are not talking about some neat theory from a university textbook.
Yeah.
We are talking about lessons that were learned through the deepest, most excruciating kind of pain. He knows the pain because he lived it over and over.
Let's unpack that first segment of our deep dive today, which is the illusion of knowledge. Because I think everyone listening right now can probably relate to this phase.
Oh, absolutely. Everyone goes through it.
When you first start trading, you just obsess over acquiring knowledge, right? You want to read every single book on candlestick patterns. You want to understand every moving average crossover. Why is that such a trap for beginners?
Well, it's a trap because it gives you the illusion of control. Human beings, just by our nature, we absolutely hate uncertainty. We hate chaos.
Yeah, we want things to make sense.
Precisely. We want a neat little formula. So when we look at the financial market, which is essentially this massive chaotic ocean of human emotion and fear and greed, we want to put a rigid grid right over it.
We want to say if A happens, then B simply has to happen.
Right. Because doing that makes us feel safe. But the reality that Livermore's life shows us is very clear. The stages of true success have nothing to do with those charts. They have everything to do with what happens inside your skull when real money is bleeding.
When real money is bleeding, that phrase is going to stick with me. Because, it is incredibly easy to be a genius on a paper trading account.
It is the easiest thing in the world. You have flawless discipline when there is no actual consequence. But this real journey, the true path to profitability, it is almost kept secret.
Why do you think it's a secret?
Because if people knew up front how brutal the journey actually was and how much emotional pain was involved, most of them would just quit before they ever placed their very first trade. The market does not give out participation trophies.
No, it certainly doesn't.
In our modern society, we are really conditioned to believe that effort is always rewarded. You work hard at your 9-to-5 job, you get your salary, you study hard for your college exam, you get an A. The market doesn't care about your effort.
That's a scary thought.
It is. You can work harder than anyone else, stay up all night running scans, and still lose everything if your mindset isn't right.
So how should a trader view that pain then? Because realistically, nobody likes losing their hard-earned money.
You have to fundamentally reframe it, and this is a critical step for anyone listening. The pain you feel when you take a loss is not failure, it is education.
Just a really expensive education.
The most expensive education you will ever buy, but you have to view it as tuition. You are paying the market to teach you a lesson about yourself.
I really love that perspective because it stops you from falling into that victim mentality, which brings up another point. A lot of new traders immediately think the game is completely rigged.
Oh, classic excuse. The market makers are out to get me. They hunted my stop loss specifically.
Exactly. People think there's some guy in a suit in a dark room just waiting for them to click buy so he can crash the price.
It is a very common psychological defense mechanism. Because if I lose, and I'm a smart person, it must be because the game is rigged against me.
Right.
It protects the ego. But the source material offers a much more empowering view, even though it's a bit terrifying.
What's that view?
The game isn't rigged. It is revealing.
Revealing. I like that word.
It acts exactly like a mirror. It reveals exactly who you are when the pressure is on. It will highlight your greed, your profound impatience, your ego, your deep-seated fears.
Well, you aren't really fighting the banks or the algorithms.
No, you are stepping into a ring to fight the absolute worst parts of your own personality.
Wow. It's almost like the market is a very intense therapy session that happens to cost you $1,000 a minute.
That is a highly accurate way to put it. It is aggressive financial therapy.
But wait, surely the knowledge matters at least a little bit, right? You can't just have perfect psychology and walk into the market without knowing what a trend line is.
That is a fair pushback, yes. You absolutely need the basic tools. You have to know the rules of the road. But think of it this way. Knowing how to drive a car, knowing how to steer the wheel, how to press the brake, how to use the gas pedal, that is the knowledge. That is your technical analysis.
Right, the mechanical part of it.
Exactly. But that mechanical knowledge does absolutely nothing to prepare you for what happens when you are driving 150 miles per hour on a Formula One track, and the car right in front of you suddenly spins out and bursts into flames.
Oh, wow.
Your reaction in that exact split second, that is not knowledge.
Yeah.
That is pure instinct, emotional control, and the will to survive.
I see. So the technical analysis is basically just the prerequisite to even be allowed onto the track.
Precisely. And the tragedy is that most people spend 5 years in the garage just meticulously polishing the car and memorizing the manual, but they never actually learn how to drive in real traffic under pressure.
That makes so much sense. All right, let's move into the real meat of this journey. The deep dive breaks this down into 3 very specific stages. Stage 1 is called the slaughter of certainty.
Yes.
Which I have to say sounds incredibly ominous.
It should sound ominous, because this is the stage where the vast majority of trading accounts go to die.
So where does this slaughter actually begin for a trader?
Ironically, it almost always begins with a little bit of luck. If we look at Livermore's early life, he was 14 years old, working in a bucket shop in Boston.
Now, for our listeners who might be new to that term, a bucket shop wasn't a real Wall Street brokerage, right?
No, not at all. You weren't actually buying or selling real shares of a company. You were basically just placing a bet on the price movement. It was essentially a gambling parlor that used stock prices instead of horse races.
So you put down $5 saying U.S. steel is going to go up. If it goes up, the house pays you out. If it goes down, they just keep your $5.
Exactly. And Livermore, who was just a kid at the time, he starts noticing these little patterns. He's standing there staring at the chalkboard all day long, watching the numbers tick by.
Just absorbing the data.
Right. And he sees that when a stock behaves in a certain specific way, it usually ticks up a few points right after. So he makes a small trade, and he wins. He makes another one, and he wins again.
And this leads to what we call the slot machine effect.
Yes. Beginner's luck. And I cannot stress this enough. Beginner's luck is the single most dangerous thing that can happen to a brand new trader.
Really? More dangerous than losing.
Far more dangerous. Because think about it. If you lose your first 10 trades right out of the gate, you immediately respect the risk. You think to yourself, wow, this is really hard. I need to be careful.
That makes sense. You get defensive early.
But if you win your first 10 trades, you start to think you are somehow inherently special. You think, wow, I can see things on this chart that nobody else can see. I have cracked the code.
You literally feel like you've discovered a magical ATM in your living room. You just punch in the numbers and free money comes out.
And that feeling is a massive psychological trap. You start believing the market is just this mechanical slot machine that is obligated to pay out every single time you pull the lever.
Because it feels so easy.
It feels effortless. And you even start wondering, why isn't everyone in the world rich? This is so simple. You aren't actually trading at this point. You're just taking money from a favorable environment.
But to be fair to him, if he was winning that consistently, he had to be doing something right. He was reading the tape successfully.
He was definitely reading the tape, yes. He had a profound natural gift for mathematics and memory. But his success in those bucket shops was completely dependent on a very specific synthetic environment.
Because there was instant execution.
Exactly. Instant execution and zero slippage. He was scalping these tiny fractional movements. He was a very big fish, but he was swimming in a very small artificial pond. He wasn't dealing with the harsh reality of the actual physical market yet.
So he had this absolute certainty because the system he was playing was overly simple.
Right. And then comes the major turning point. He decides to pack up and go to New York.
The big leagues.
The big leagues. He walks into a real, legitimate Wall Street brokerage. He sits down and tries to play the exact same game he played in Boston. He sees his pattern. He confidently places his buy order.
Yeah.
But on the real exchange, there's a time delay.
Right, because the order has to physically get to the floor.
By the time his broker's runner gets the order to the trading pit, and the order is filled, and the confirmation comes back, the price is completely changed.
Massive slippage.
Massive account-destroying slippage. And suddenly, practically overnight, his perfect foolproof system completely stops working.
So what does he do? Does he step back and reevaluate?
No. And this is the trap of stage one. He does not stop. He actually doubles down.
Right.
Because he's deeply, fundamentally certain that he is right.
And there's that word again, certainty. Why is certainty such a fatal flaw for a trader? Shouldn't we strive to be confident in our setups?
Confidence and certainty are two vastly different things. Confidence is knowing that you have the skills to handle whatever the market throws at you, even a loss. Certainty is believing that you actually know what the market will do next.
Oh, I see the distinction.
When you are certain, you don't bother using a stop loss. Why would you?
Yeah.
You know you are right, so a stop loss is just a waste of time.
You feel like the market owes you the win.
Exactly. When you are certain, you never hedge your positions. And worse, when you are certain and the price starts dropping against you, you don't cut your losses and get out, you buy more.
You average down into a losing position.
You load up heavy. Because your ego has convinced you that the entire market is simply mispricing the asset, and you are the only one who sees the truth.
And that is exactly when the trading account goes straight to zero.
That is when the true humiliation happens. And notice, I am deliberately using the word humiliation, not just a financial loss.
Why humiliation?
Because the market doesn't just quietly take your money in stage one. It aggressively strips you of your dignity. It forcefully proves to you that your high IQ, your expensive college degree, your bulletproof system, it all means absolutely nothing if you don't respect risk.
And that happened to Livermore.
It did.
Yeah.
He went completely bust in New York almost immediately. The boy plunger, this supposed genius kid who beat all of the bucket shops, had to humbly borrow money just so he could afford the train ticket to leave town.
That is just brutal. Imagine the psychological blow of crawling back home with nothing to your name.
It completely destroys the ego. But here's the secret. The destruction is the entire point. You simply cannot progress to stage two while your ego is still sitting in the driver's seat.
So what is the grand realization that finally pulls a trader out of this slaughter?
It is what we can call the first great truth. And it's very simple. You know nothing.
Ouch. That is a tough pill to swallow.
It hurts deeply, but it is entirely necessary. You have to finally realize that those perfect patterns you thought you saw were largely just random noise. That gut intuition you felt was really just wishful thinking masquerading as skill.
So you have to completely shift your worldview.
You have to shift your paradigm from thinking the market is a neat little puzzle that you can solve with math to realizing that it is a chaotic war zone that you simply have to survive.
So if someone is listening to this right now and recognizing themselves in this phase, How do they graduate? What is the specific exit requirement to leave stage one?
The only way out is genuine humility.
Real humility, not just pretending to be humble.
Exactly. Not the fake humility where you post on a forum saying, oh, I'm just a student of the market, but deep down you still secretly think you are the next Warren Buffett.
Right.
I mean, a bone-deep, fundamental acceptance that you are going to be wrong, that you will be wrong very often, and that being wrong isn't a reflection of your worth, and it isn't a failure. It is just the everyday process of trading.
You have to accept you aren't the master.
You can only leave stage one when you finally accept that you are not the master of the market. You are, and always will be, a servant to it.
That has to be incredibly difficult for people who are highly successful in other areas of life. You see doctors, lawyers, engineers coming into trading, and they seem to struggle the absolute most.
They absolutely do, and it makes perfect sense why. If you are an engineer and you build a bridge and that bridge falls down, it means you made a mathematical mistake in your calculations. Cause and effect.
Right. There's a clear error to fix.
But in trading, you can build the bridge flawlessly. You can execute your strategy perfectly. And then a geopolitical earthquake hits the news wire and the bridge collapses anyway. You have to accept that the final outcome of any single trade is simply not in your control.
So let's say a trader actually survives this. They scrape themselves off the floor, they admit they know nothing, they drop their ego, and they move forward. This brings us to stage two, which is called the discipline of waiting.
Yes. And I always say this is the strangest phase of a trader's development.
Why do you call it strange?
Because you are making this massive transition from pure arrogance to actual clarity. Back in stage one, you were hallucinating patterns that weren't there.
Right, seeing things you wanted to see.
But in stage two, after the market has humiliated you and wiped your eyes clean, you actually start to see the market for what it really is. You start to truly understand market structure. You can finally identify a genuinely good setup.
Well, that sounds like a great place to be.
It sounds great on paper, but in reality, it is absolute torture.
Why?
Because now you have the skill to see the opportunity forming, but you also have enough painful experience to know that the market conditions aren't perfectly aligned yet. So you have to sit there, staring at the screen, and sit on your hands.
This directly reminds me of that famous quote from the source material where Livermore admits his hardest lesson was simply learning how to sit still.
It sounds so incredibly simple when you say it out loud, doesn't it? Just sit still.
Yeah.
But put yourself in that chair. Imagine you're a full-time trader. Your job, your identity, supposedly, is to trade. You are watching the screen for 8 hours a day. You see prices moving up and down. You see people on social media bragging about the money they are making right now. And you have to look at all of that and do absolutely nothing.
That sounds incredibly boring.
It's so much worse than boring. It is anxiety-inducing. Let's look at the classic anecdote of the crash of 1907 to really understand this.
Okay, set the scene for us.
This was a pivotal moment in American financial history. The entire market was incredibly fragile. Public trust was evaporating rapidly. Major banks were literally teetering on the edge of total collapse.
This was the famous panic where J.P. Morgan essentially had to lock all the top bankers in his private library and refuse to let them leave until they agreed to bail out the economy, right?
That is exactly the one. Now, put Livermore in this picture. He is watching this entire macro situation develop over months. He has rebuilt his trading stake after his previous blowups. He is fully back in the game.
And he's watching the tape.
He is watching it closely. And he sees the hidden weakness. He sees that all the smart money, the big institutions of the day, they are quietly distributing their shares. They are selling while the general public is still blindly buying.
So he knows it's going to drop.
He sees the credit markets drying up. Every single fiber of his being, all of his trader's instinct, is screaming at him to short the entire market right then and there.
But he doesn't.
He waits. For months. He is just watching and waiting. He can practically taste the collapse coming. He knows with absolute certainty that it is going to happen eventually. But he forces himself to wait.
Why? Why not just get in early if you know it's going to crash?
Because of the most important lesson he learned from his bankruptcies. Being right too early is exactly the same as being wrong.
Wow. Being right too early is the same as being wrong. That is a quote that should be framed and printed on the wall above every trading desk in the world.
It is profound because it addresses the actual mechanics of trading. Think about it practically. If he shorts the market 3 months before the actual crash begins, he has to pay daily interest on that massive margin position.
Right. The carrying costs alone would bleed him dry.
Exactly. And markets rarely go straight down. Before a major crash, the market almost always has one last, vicious sucker's rally. A sharp, violent spike upward, designed to trap late buyers and shake out early short sellers.
A fake out.
If he is in a short position too early, that sudden upward spike completely wipes him out. He gets a margin call from his broker, he is forced to liquidate his position at a massive loss, and then, maybe a week later, the market rolls over and crashes exactly the way he predicted it would. But it doesn't matter, because he is sitting broke on the sidelines watching it happen without him.
That has to be the ultimate tragedy for a trader. To do all the research, have the exact right thesis, predict the market perfectly, and still end up totally broke.
It is soul-crushing. So stage 2 is fundamentally about mastering time. It is about identifying what Livermore referred to as the pivotal point.
What's a pivotal point?
He wasn't just waiting for a vague feeling in his stomach. He was waiting for a very specific, predefined price level to finally break, which would mathematically confirm that his thesis was actively playing out.
It seems like stage 2 is really the phase where a trader has to completely redefine what the word work actually means to them.
That is a brilliant way to put it. In almost every other profession on earth, if you want to generate more income, you do more physical things. You lay more bricks, you write more lines of code, you take on more consulting clients.
Activity equals money.
Exactly. But in trading, the market absolutely does not pay you for your activity. The market pays you for your patience.
I made my money sitting, not thinking.
That is the defining philosophy of stage 2. The truly life-changing money is never made in the confusing day-to-day chop of the market. It is made by capturing the major secular moves.
And to catch those, you have to do nothing most of the time.
You have to cultivate the discipline to let 99% of the mediocre everyday trades just pass you by without clicking a button.
But Thomas, talk to me a little more about the actual boredom aspect of this, because I genuinely think that is what kills the vast majority of people who make it to stage 2. You are sitting at home, you have the brokerage app open on your phone right next to you. It is just so dangerously easy to reach over and tap the buy button.
It is what we call the boredom trap. You sit there for 3 days, nothing aligns with your strategy, so your brain starts looking for a hit of dopamine. You essentially invent a trade out of thin air just to feel alive.
Just to feel like you're doing your job.
Right. You see a random stock tick up 1%, and your brain tricks you. You think, oh, maybe this is the start of a breakout. I should get in early.
But it rarely is.
It almost never is. It's just market noise.
Stage 2 is the grueling process of conquering that specific urge. It is the daily discipline of strictly separating what you deeply want to happen from what the chart is actually proving is happening. Hearing you describe it, it really sounds remarkably similar to an addiction withdrawal. You are literally addicted to the action and the adrenaline of having an open position.
It is exactly an addiction. You are addicted to the chemical rush. Stage 2 is the detox center. You have to stop getting high on the thrill of the action and slowly train your brain to start getting its satisfaction from executing flawless discipline.
There's a really fascinating story in the source material about the Cotton King, a guy named Percy Thomas, that fits perfectly into this struggle, right? Livermore was actually doing well in stage 2, and then he crossed paths with this guy.
Ah, yes. The tragedy of Percy Thomas. This is such a crucial lesson for anyone navigating stage 2. Livermore had done all the hard work. He had thoroughly analyzed the global cotton market. His own independent research told him clearly that cotton prices were going to go down.
So he had his thesis.
He had his thesis, and he was right. But then he meets Percy Thomas. And Percy was legendary at the time. He was literally known globally as the Cotton King. He was highly charismatic. He was famous. He was incredibly wealthy.
He had massive authority.
Exactly. And Percy pulls Livermore aside and tells him, "You are completely wrong. Cotton is definitely going up." He gives him all this supposed inside information, all these exclusive crop reports that the public didn't have access to.
And Livermore, despite everything he knew, actually listened to him.
He listened. He completely broke his own golden rules. He violated his own careful analysis because he allowed the sheer weight of someone else's absolute certainty to override his own independent judgment.
So what happened?
He started buying cotton. And as the price naturally started to drop, exactly as his original research predicted it would, he kept buying more. Because Percy kept assuring him that it was just a temporary dip and the big turnaround was coming.
And he ended up losing everything again, didn't he?
Millions of dollars. Completely gone. Wiped out. And that right there is the brutal final exam of stage 2.
The final exam.
You'd have to finally learn that absolutely nobody, not the talking heads on television, not the financial news articles, not the famous cotton kings of the world, nobody knows more about your specific trade than you do.
You have to own it completely.
You have to take 100% radical responsibility. If you win the trade, it is because of your process. If you lose, it is your fault alone. You cannot outsource your conviction to a guru.
So if we summarize the journey so far, stage 1 is all about violently losing your ego. Stage 2 is about building emotional control, mastering your patience, and developing true independence from outside noise.
Yes, exactly. In stage 2, you aren't bleeding your account dry anymore. You have stopped the bleeding. But you probably aren't getting rich quite yet either. You're just grinding it out. You are surviving the elements.
But a transformation is quietly taking place.
A profound transformation. You eventually reach a point where you start viewing patience as a painful sacrifice. You stop feeling like you are missing out by waiting, and you begin to view that patience as your greatest weapon. It officially becomes your mathematical edge over the impatient crowd.
And once that profound level of patience literally becomes second nature, that is when you unlock the door to the final level. Stage 3, becoming the market.
Yeah.
Now, I have to admit, reading the outline, this stage sounds almost mystical or supernatural.
It really does sound that way. And frankly, it is the absolute hardest stage to adequately explain to someone who hasn't experienced it because it completely transcends basic logic and spreadsheets.
The outline uses the epic crash of 1929 as the primary example of this stage. Livermore shorted the U.S. stock market into absolute oblivion. He made a staggering fortune while the rest of the country was facing total economic devastation.
He made roughly $100 million during that crash. And because of the scale of that win, the general public genuinely thought he had somehow beaten the market.
Right, they thought he outsmarted it.
They thought he was this supernatural prophet or a mathematical wizard who broke the code. But his own response to that praise was very revealing. He said, "I didn't beat the market, I became it."
What does that actually mean in a practical sense, to become the market? Are we talking about some kind of magic here?
It isn't magic at all. It is actually just extreme subconscious pattern recognition.
Subconscious pattern recognition. Explain that a bit more.
Think about a professional athlete at the absolute peak of their career. When a world-class soccer player is running down the field with the ball, are they actively calculating the physics of the bounce?
No, definitely not.
Are they consciously thinking, okay, the wind speed is currently 5 knots from the east, the angle of my foot needs to be exactly 30 degrees to achieve optimal trajectory? Of course not.
They just do it automatically.
They just perform the action. Because they have physically seen the ball move that exact way 10,000 times in practice. Their brain is processing the trajectory and the physics far faster than their conscious thinking mind could ever articulate.
A state of flow.
Exactly. In stage 3, a veteran trader feels the underlying pulse and rhythm of the market as naturally as they feel their own heartbeat. They don't have to force the analysis anymore.
So when historical accounts say that Livermore possessed a sixth sense for trading, it wasn't a psychic ability, it was just the culmination of extreme, painful experience.
Exactly. And there is a very specific example from the material that really brings this down to earth and highlights how it works mechanically.
Let's hear.
Livermore was observing the overall market structure leading up to the 1929 crash. Now, the broader economy was booming. Everyone was making money. The public euphoria was at an absolute all-time high.
The roaring 20s.
Right. But Livermore, watching the tape day in and day out, noticed something very subtle about the underlying behavior of the leading blue-chip stocks compared to what they call the cats and dogs.
The cats and dogs, I love that term. That basically means the cheap, low-quality penny stocks, right?
The garbage companies.
Yeah.
He noticed that the high-quality stocks, the companies that had led the entire multi-year bull run, had suddenly stalled. They'd completely stopped going up, even on days when the broader index was green.
That's a major red flag.
Huge red flag. But simultaneously, the junk stocks, the cats and dogs, were absolutely flying high. They were seeing massive speculative volume.
Because the general public was just buying whatever was cheapest, hoping to strike it rich quickly.
Precisely. They thought they were finding bargains. Now, Livermore recognized this specific divergence. He had seen this exact rotational pattern before previous smaller market tops throughout his career.
So his brain recognized the pattern instantly.
It wasn't a slow, deliberate mathematical calculation. It was an instant, intuitive recognition of a deep systemic sickness hidden inside the market structure.
It makes me think of an experienced doctor looking at a patient. The patient might walk in smiling, looking completely healthy to a normal person, but the veteran doctor notices a very faint subtle yellow tint in the whites of their eyes.
That is a perfect analogy.
The doctor doesn't even need to wait for the expensive blood test to come back from the lab. He intuitively knows it's liver failure right then and there.
Spot on. Now let's look at how the 3 different stages of traders would handle this exact kind of gut feeling while being in an active trade.
Okay, this is a great exercise. How does a stage 1 trader handle it?
A stage 1 trader might feel a slight twinge of discomfort, but they will immediately panic internally. They will completely ignore the feeling, or worse, they will double down on their position, desperately hoping the uncomfortable feeling just magically goes away.
Because they still demand certainty.
Right. Now, a stage 2 trader handles it much better. The stage 2 trader feels the sickness in the market, but they rigidly rely on their predefined rules. They look at the chart and say, well, things look a little shaky, but my hard stop loss is set at $50. The price hasn't hit $50 yet, so I will employ my discipline and just patiently wait.
And to be fair, that is solid discipline.
It is excellent discipline, and it absolutely saves them from financial ruin.
Oh.
But let's look at the stage 3 master. The stage 3 trader feels that exact same sickness in the tape, and they liquidate their entire position immediately.
They don't wait for the stop loss to trigger.
They get out long before the price ever gets near their stop loss. Why? Because they literally heard the market speaking its intent through the subtle nuances of the price action. They intimately sensed the structural weakness before it ever became visibly obvious on a standard candlestick chart.
And in the specific story we're referencing, didn't that stock entirely collapse just a few hours after he sold everything?
It completely cratered. And by trusting his internalized experience, he saved himself an absolute fortune. Not because he was strictly following a rigid rule book step by step, but because he was so completely in tune with the rhythm of the market that he knew the music had officially stopped playing long before anyone else in the room even noticed the silence.
That is incredible. But Thomas, I do have to ask a practical question about this. How did he actually execute trades at that massive size? Because he didn't just casually dump $100 million into a short position all at once based on a gut feeling, right?
No, absolutely not. And this is where the sheer technical mastery of stage 3 really shines. He used a concept that he referred to as probes.
Probes. Like sending out a scout.
Exactly. He would initiate a very small short position, just a tiny fraction of his total capital. Then he would sit back and watch how the market reacted to his order. If the price immediately started dropping, thereby confirming that his underlying thesis was correct, he would then add more size to the position. He would slowly pyramid his way into the trade. He aggressively forced the market to prove to him that he was right before he ever committed the truly big money.
So he wasn't gambling wildly, he was systematically testing the waters.
He was probing the market to find the line of least resistance. If he aggressively pushed against the market with a small short, and the market didn't forcefully push back with buying pressure, he knew right then that the buyers were completely exhausted.
And once he knew that, he went in for the kill.
Then he would attack with full size.
You know, hearing all of this, it strikes me that reaching this level of mastery must be incredibly deeply lonely.
It is, without a doubt, the most isolating stage of a trader's entire life.
Why is that?
Because you literally cannot explain your process to anyone else anymore. If you are a stage 3 trader, and you just sold a massive position, and another trader asks you, hey, why did you sell that? And you look at them and say, well, the tape just started to feel a little heavy to me.
They are going to look at you like you belong in an asylum.
They will think you have completely lost your mind. They will demand to see the spreadsheet.
Show me the hard data. Show me the exact moving average crossover.
Exactly, because they are still in stage 1 or 2. They need the rigid grid. But to you, in stage 3, it isn't a vague guess. It isn't magic. It is hard-earned, deeply internalized experience. It is the result of thousands upon thousands of hours staring at the tape, all synthesized and stored in your subconscious mind.
So it's mastery, pure and simple.
It is the definition of mastery. A concert pianist does not have to stare at their fingers to find the right keys. A stage 3 trader doesn't look at standard technical indicators in the same rigid way anymore. They look right through the indicators and see the raw human emotion underneath.
This brings us to a really crucial question for the audience. We live in a modern world that is completely obsessed with life hacks, shortcuts, and fast tracks to success.
Yes, we do.
Everyone wants the 30-day masterclass. So the obvious question is Is it physically possible to skip these painful stages? Can someone just buy a book, memorize all of Livermore's rules, and teleport straight to the stage 3 flow state?
No, absolutely, unequivocally no, and I cannot possibly emphasize this point enough. You cannot skip the stages. It is fundamentally impossible.
But why? That seems so inefficient. I mean, if you tell me that a stove is burning hot and you show me the thermal data proving it is hot, why do I have to physically press my hand against the burner to learn the lesson?
Because surviving the financial markets is not a purely intellectual exercise. It is a biological one.
Biological one. Explain that.
You can read in a textbook that the stove is hot. Your conscious mind understands the concept of heat, but until you actually press your flesh against that metal and suffer a second-degree burn, your central nervous system does not truly, instinctively respect the danger of the heat.
Wow.
You can easily memorize every chart pattern ever invented in a weekend, but you absolutely cannot memorize emotional resilience. You cannot read a paragraph and suddenly possess deep humility.
You literally have to earn those traits through trauma.
You have to live through the experience. The biographical material explicitly refers to this process as a crucible.
A crucible.
Yes. In metallurgy, a crucible is a heavy vessel used to hold metal while it is melted down at incredibly high, violent temperatures in order to burn away all the impurities and purify the core metal.
So the traitor is the metal.
You are the metal. You have to willingly walk through the fire. You have to feel the crushing humiliation of stage 1 in order to completely kill off your natural ego. You have to endure the excruciating, mind-numbing boredom of stage 2 in order to forge ironclad discipline. And you have to embrace the total isolation of stage 3 in order to finally learn to trust your own intuition over the noise of the crowd.
The history says Livermore went completely broke 4 separate times while trying to learn these exact lessons. 4 times.
4 separate times facing absolute catastrophic financial ruin. And every single time he blew up, it wasn't a failure. It was just a brutal graduation ceremony, moving him up to the next necessary level of understanding.
That is a staggering price to pay for an education.
It is the ultimate price.
Yeah.
And frankly, that is exactly why copying other people's trades always fails in the long run.
Right, the whole signal service industry.
Yes. You can go online right now and pay a monthly fee to copy the exact trades of a supposed guru. You can literally mirror their account. But all you are doing is blindly borrowing the mathematical end result of their decision process.
You aren't borrowing the mindset that created the decision.
Exactly. You cannot copy and paste their psychology into your own brain. When that copied trade inevitably goes into a drawdown and starts showing red, the guru might be perfectly calm.
Because the guru is in stage 3.
Because he knows from decades of experience that it's just a standard structural pullback and the thesis is still intact. But you will completely panic. Your heart will race, you will sweat because your brain is still trapped in stage 1 and you honestly think the financial sky is falling.
And what happens then?
You will panic, sell your position at the absolute bottom of the dip to stop the pain. Meanwhile, the stage 3 guru calmly holds his position through the dip and sells it 2 weeks later at the very top for a massive profit.
And it was the exact same underlying asset.
Same asset, exact same entry price, but an entirely different trader psychology. That is why the strategy is secondary.
That is honestly a very terrifying thought. It really proves that it's not about the trade itself at all. It is entirely about the trader executing it.
The entire journey is simply about fundamentally becoming a different version of yourself.
Which leads us beautifully to the ultimate realization mentioned deeply in the source text. And I want everyone listening to pay close attention to this. The quote is, "The money was never the point."
It sounds like such a massive cliche when you say it out loud, doesn't it? The classic, oh, it's not about the money, it's about the journey.
Yeah, try telling that to someone who just blew their account.
Right. But for the true stage 3 master of the market, it is the absolute reality. At that elite level, the actual dollar amount is largely irrelevant. The money is literally just the digital scoreboard.
It's just a metric.
It simply provides objective feedback telling you how accurately you are playing the game and reading the environment.
So if $100 million isn't the real point of all this suffering, what is the actual ultimate prize?
The ultimate prize is unshakable self-trust.
Self-trust.
It is having the quiet, undeniable knowledge of exactly who you are when absolute chaos hits and everything is on the line.
That is powerful.
It is the rare ability to Look at an incredibly complex situation, make a definitive decision with totally incomplete information. Because let's face it, you never ever have all the variables in the financial market.
You are always operating in the dark to some degree.
Exactly. And being able to make that choice, execute it, and then go home and sleep peacefully at night, completely accepting full responsibility for whatever the consequences may be.
I have to imagine that that profound level of self-mastery doesn't just stay compartmentalized in your trading account. It must bleed into every other aspect of your personal life.
Oh, it absolutely transforms your entire life. You become a person who simply cannot be easily shaken by everyday problems. Traffic jams, interpersonal conflicts, business setbacks, they just don't trigger you the same way anymore because you have mastered your internal response to chaos.
I think that is a genuinely beautiful goal to strive for. It elevates the whole profession. It proves it is ultimately about building character, not just stacking currency.
I couldn't agree more.
So, as we start bringing this home, for all of our listeners out there right now, I want to pivot to something highly actionable and practical. We have spent this time thoroughly describing these three brutal stages. Now, I want everyone listening to take a moment and self-reflect. How can an individual trader actually accurately identify which stage they are currently stuck in?
That is the most vital question anyone can ask themselves today. And the diagnostic test is actually remarkably simple. You just have to ask yourself one question. How do you genuinely react internally when you take a loss?
Okay, let's break that diagnostic down stage by stage.
Let's start with stage one. If you close a losing trade and you immediately feel a surge of hot anger, if you feel like the market somehow deliberately stole money from your pocket.
Like you were robbed.
Right. And if you feel this overwhelming, frantic urge to immediately jump back into another trade just to quote-unquote get your money back,
Yeah.
then you are firmly trapped in stage one.
Because you are still actively fighting against the market reality.
Exactly. You are still demanding certainty. Your ego still fundamentally believes that you deserve to win every time.
Okay. And if someone is sitting there right now realizing, oh no, that is exactly me, I'm in stage one, what is your direct advice to them?
The most important piece of advice is, please do not quit.
Don't quit.
Do not give up,
Yeah.
but you must immediately stop trading with large size. You need to drastically reduce your position sizing down to the absolute bare minimum, to the point where a financial loss doesn't impact your life or your emotions at all.
So just survive the learning curve?
Yes. Understand that the pain and the teeth kicking you're receiving right now is the curriculum. Let the market humble you. Stop desperately trying to prove to the world that you are right and pivot your entire focus to simply surviving the day.
That is fantastic advice. Okay, moving on. What are the symptoms of a trader who is currently in stage two?
A stage two trader's reaction is very different. If you take a loss, or perhaps more accurately, if you completely miss a great trading setup, and your primary emotional response is deep frustration at the slowness of it all.
The boredom.
Right. If you catch yourself constantly thinking, I know exactly what I am supposed to be doing, but sitting here is just taking way too long, then you are solidly in stage two.
So they have the technical skills, but not the temperament.
Precisely. You understand the mechanics, but you haven't fully embraced the necessity of extreme patience. You are simply bored out of your mind.
And what is your prescription for the stage two trader?
You have to fiercely protect your discipline. You have to realize that boredom is not your enemy. Boredom is your best friend in this business.
Patience is the edge.
Patience is the entire edge. Do not, under any circumstances, abandon your carefully crafted rules just to get a cheap thrill or some excitement during a flat market.
A step away from the screens.
Yes. Go play a round of golf. Go to the gym. Read a book. Do literally anything else in the world except click that mouse when your system hasn't given you a clear setup.
Outstanding. And finally, what about stage three? How do you know if you've made it?
Well, honestly, if you are truly operating in stage three, you probably aren't even watching this video right now because you are way too busy being completely immersed in the flow state of the market.
That is so true. They don't need us anymore.
Exactly. But on a serious note, if you are approaching that level, you know it internally. You feel a profound, lasting sense of peace while you are trading.
The outcome doesn't dictate your mood.
Right. Whether a trade wins big or hits the stop loss, your baseline emotional state practically does not fluctuate at all. You are just coldly, efficiently executing your edge. You've transitioned from being a terrified victim of the market to being a calm, detached observer of it.
And for those who feel like they are somewhere stuck in the messy middle between these stages,
My advice to them is to simply understand and accept that human transformation takes time. The market is going to take exactly as long as it takes to mold you.
You can't rush the process.
You can't. You cannot force a flower to bloom faster by violently pulling on its petals. It will just destroy the flower. And you cannot forcefully accelerate your psychological development as a trader. You just have to put in the screen time.
The transformation itself is the entire point of the exercise.
Yes, it is. The market is the ultimate forge. It takes wide-eyed dreamers and crushes them into hardened traders. It takes blind, desperate hope and slowly beats it into tangible skill. It turns reckless amateurs into cold-blooded professionals, but it only does it by putting you through the fire.
Thomas, I have to say, this has been an absolutely incredible deep dive today. It is exceedingly rare that we actually get to sit down and talk about the very soul and psychology of trading, rather than just endlessly debating the mechanics of indicators.
It's the most important conversation a trader can have. You can hand a stage one trader the single most mathematically perfect, back-tested strategy in the history of finance, and they will still find a way to blow up their account.
Because their psychology will sabotage it.
Exactly.
Okay.
But conversely, you can hand a stage 3 master a completely mediocre, average strategy, and they will extract millions of dollars from the market with it. Because the master understands that the strategy is not the edge. He is the edge.
He is the edge. I absolutely love that framing. Well, before we officially wrap things up today, I just want to add one little lighthearted thought to everything we've covered. We talked quite a bit about the agony of sitting on your hands during stage 2.
We did, yes.
I genuinely think that sitting on your hands is physically the hardest workout any trader ever has to do. I swear, there are weeks where my hands are far more exhausted from me physically sitting on them to stop myself from overtrading than my actual brain is from analyzing the charts.
Oh, I know that feeling intimately.
Mm.
It truly is a brutal isometric exercise for the trader's soul.
It absolutely is. Well, listen, friends, we have covered a massive amount of crucial ground here today. From the brutal slaughter of certainty in the shady Boston bucket shops to the agonizing discipline of waiting during the Great Panic of 1907, and finally reaching that ultimate flow state and becoming the market during the devastating crash of 1929.
It is the ultimate hero's journey.
It really is. And I want you to remember, regardless of exactly where you currently find yourself on that difficult path, you just have to keep putting one foot directly in front of the other. Keep showing up.
And please remember that you're absolutely not alone in this struggle. Every single master of the universe you see today was once a total disaster of a beginner. Jesse Livermore went completely bankrupt 4 separate times. If he can find the strength to keep going back to the desk, so can you.
Beautifully, beautifully said. Now, before we officially sign off, I do have to give you all a very solemn and mandatory reminder. We have obviously talked a lot today about massive amounts of money, huge historical wins, devastating losses, and the mechanics of trading, but please, always keep this in mind.
Yes, this is critical.
The content provided in this video is strictly for sharing historical knowledge and personal experience only. It is absolutely not intended to be, nor should it be taken as, direct investment advice.
That is exactly right. Participating in financial investments always carries a significant degree of risk to your capital. Every viewer needs to conduct their own careful, independent research and take full personal responsibility for their own financial decisions. Never, ever trade with money that you cannot comfortably afford to lose entirely.
Perfect. Thank you again so much, Thomas, for coming on and sharing this incredible wealth of wisdom with us today. It has been a true privilege.
The pleasure was entirely mine. Thank you so much for having me on the channel.
And to all of you out there listening, keep your egos in check, stay safe in the markets, trade smart, and we will see you right back here for the next deep dive. Goodbye.